Hello and welcome to Swissquote's Daily Market Talk. It's Tuesday, September 10th, and major US and European indices and also the US dollar rebounded at the start of this new week. Now, technology stocks performed quite well yesterday, but Apple's new products and its AI capabilities didn't quite meet the investors' expectations at yesterday's annual event. So today, all eyes are on the debate between Donald Trump and Kamala Harris, while from tomorrow, focus will be shifting to the US CPI update. So stay tuned as we dive in. So the European and US indices didn't get too demoralized by poor sentiment at the weekly opening bell that we saw in Asia yesterday and rebounded on Monday's trading session. Though the rebound that we saw yesterday wasn't much on conviction that this rally shall continue, but rather looks more like the correction of last week's decent sell-off that we saw in the major US and European indices. In all cases, the European Stoxx 600 rebounded to flirt with the 50-day moving average resistance, but investor confidence index unexpectedly worsened in the Eurozone in September. Then the British FTSE 100 recorded the best performance among the European indices, the major European indices on Monday's trading session, but the energy and mining heavy FTSE 100 investors don't sleep on their both ears these days, given the selling pressure that we see in energy and commodities that is obviously backed by slowing China and also slowing global growth worries beyond China. In this context, iron ore prices, for example, have now hit their lowest levels in almost 2 years. Then copper futures actually remain comfortably in the negative trend building since May this year, while the US crude has slipped below the $70 per barrel psychological mark last week, remember, on ample end of summer driving season supply and also on growing demand worries. Yes, also due to China and also beyond, but also due to China. And Brent crude will soon join its peer below the $70 per barrel mark as well. So consequently, Rio Tinto and Glencore in the FTSE 100 are among the worst performance of the index so far this year, while BP, which is another heavyweight in the FTSE 100 index, sank to the lowest levels in almost 2 years. So yes, the FTSE 100's year-to-date performance doesn't look that bad because a part of it is due to the aerospace and defense companies, thanks to this heightened government spending in defense and also global demand for defense-related products. And in this context, Rolls-Royce Holdings and BAE Systems, for example, have been standout performance within the sector, with Rolls-Royce stock rising over 70% since the year started, and BAE Systems also is seeing a significant boost from increased defense budgets for the governments as well. But the global growth concerns are building right now, and the negative impact of these growing concerns on investor mood will likely limit the FTSE 100's upside potential. Now, one thing that could still help sentiment there is the interest rate cuts from the major central banks around the world and the expectation that China will also step in with bigger stimulus measures to counter deflation that's eating the country's economy right now. So there's always this little chance that we see the energy and mining stocks that are in the FTSE 100 attract dip buyers. But for now, you would agree with me that the selling pressure remains quite strong. I mean, look, US crude just looks slightly better at yesterday's trading session, and that was partly on news that Chevron, ExxonMobil, and Shell are limiting operations in the Gulf of Mexico due to the strengthening tropical storm Francine. Then the peace talks in the Middle East are going nowhere really, but the barrel of US crude is actually having hard time attracting the dip buyers below the $70 per barrel psychological level. But anyway, going to the US right now, The US two-year yield consolidated yesterday below the 3.70% level, but the US dollar index rebounded ahead of Wednesday's CPI data from the US that will certainly not change the expectation of a 25 base point cut from the Federal Reserve at next week's monetary policy meeting, but that could, if significantly different than the market expectations, revive or temper the dovish Fed expectations for the rest of this year. Because remember, we are still talking about a 100 basis point cut before the year ends in the US, as many investors out there think that the Fed may have fallen behind the curve, a situation that will actually require one jumbo rate cut from the Fed in one of the next 3 monetary policy meetings of the year. But that is possible only and if only inflation in the US progresses toward the 2% policy target. So the euro dollar extended losses yesterday to 110.40 level on rising dovish bets into Thursday's European Central Bank meeting, while the dollar yen rebounded from its August low levels. The major US indices rebounded as well at yesterday's trading session. Nvidia and Tesla, for example, led gains in technology, as Apple actually closed nearly flat yesterday's trading session after revealing its new products at this most expected annual event. Now, I won't be talking here about their new iPhones, which have a thinner look, different colors, and camera buttons, or whatever they have on these devices, but I will talk about Apple Intelligence. That was supposed to be a game changer for Apple devices and eventually boost the new iPhone sales. So on that front, the company CEO Tim Cook said yesterday that the iPhone 16 was built for AI from the ground up, and Apple Intelligence will include an upgraded Siri assistant and ability to create custom emoji with text prompts. But you would agree with me that nothing there that we didn't know before, and nothing wow really, as you can see, because compared to ChatGPT, for example, that helps you finding the errors that you made in your code, helps you find ideas for dinner tonight, and even talks to you when you are having an emotional breakdown, when your kids have been quite hard that evening to you at the dinner time, for example. Or is nothing compared to Hey Jen, that's creating an avatar for you in just a couple of minutes that looks and that sounds surprisingly and exactly like you do. So personally speaking, I am not very much impressed with the ability of creating emojis on text or whatever Apple Intelligence proposes today, and investors weren't either. They didn't think that this will massively surge sales, even less so as these AI features will be gradually updated and won't even be available at the product's launch date. So, yes, ladies and gentlemen, the stock plunged as much as 1.5% yesterday during the event and recovered to close yesterday's trading session just a little bit in the positive. But elsewhere, Oracle jumped nearly 9% in the after-hours trading. And that was on the back of strong quarterly results thanks to growing AI demand for its cloud computing business. And even the super microcomputer actually rose 6% at yesterday's trading session along with the other technology companies. Now, if Apple held its product event on this Monday, it is because, they didn't really want to interfere with the much anticipated and the much expected debate between Donald Trump and Kamala Harris that will be taking place today. So the candidates are racing neck to neck right now. They throw various promises on the table to convince voters to choose them. And we extendedly talked about the Trump trait a few weeks ago, remember, saying that a Trump win would benefit big oil companies, small and domestic companies and businesses like the ones that are in Russell 2000, and cryptocurrencies. Now, if we do the same exercise for Kamala Harris, a Harris win would support, the ESG and green focus companies, healthcare, infrastructure, and technology companies, as she puts a particular emphasis on sustainable and inclusive growth. So, the last big debate between the President Joe Biden and Donald Trump cost Joe Biden his candidacy, remember? So let's see what today's debate will bring. So this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X and on LinkedIn for regular market updates, and subscribe to our YouTube channel for daily market comments. And also, please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.